Look, political corruption, it's not exactly a new thing, right? I mean, history is just littered with examples, like the Abscam scandal back in the 70s where congressmen were caught taking bribes on camera. But today, we're diving into some source material that suggests the game has changed. The tools are different now. We're talking social media, lightning-fast trading, and crypto, and they might just be changing the scale of this very old problem.
All right, so let's zoom in on one specific moment. It's during this really tense crisis with Iran. You know, the financial markets are totally on edge, prices are all over the place, and then, out of nowhere, a presidential post on social media seems to flip a switch on the entire situation.
And boom! The second this message goes live, the markets react. Oil prices, which had been creeping up because of all the tension, just plummet. It looked like a huge sigh of relief from the markets, like the threat of war was suddenly off the table. A single post moving billions of dollars.
And this is where our story really gets interesting. Because, yeah, the market reacting after the post, that makes perfect sense. But what the source material we're looking at points to is what was happening in that tiny little window of time just before the public knew anything about it.
So, in the 15 minutes right before that post hit the internet, both the New York Mercantile Exchange and the Brent crude market saw this absolutely massive spike in trading. I mean, we're talking way, way beyond the normal volume for that time of day. It was like a sudden flood of bets being placed on oil futures.
And just to give you a sense of scale here, all that activity, those trades were worth around $580 million. That is a staggering amount of money to be moving in just 15 minutes, right before a major market-moving announcement.
But hold on, because it wasn't just oil. At the exact same time, a single enormous trade was placed on the S&P 500 futures market. That's a bet on the 500 biggest companies in the US. And this one trade, it was for $1.5 billion.
Now, a trade that big, it has an impact. In the very minute it was executed, that single bet was so huge, it actually pushed the entire S&P 500 index up by 0.3%. I mean, somebody out there with a ton of cash was making a very, very confident bet that some good news was on the way.
And here is the kicker. This is the part that makes you go, wait, what? A little while after that post calmed everything down, the Iranians came out and publicly denied that any of these peace talks were even happening. This one detail, well, it throws a completely different light on the whole event, doesn't it?
So you're probably wondering, okay, how on earth do you even profit from something like that so fast? Well, the answer, according to the source material, lies in this really powerful financial instrument called a futures contract.
Simply put, a futures contract is basically a bet on which way the price of something, in this case oil, is going to go. You're locking in a price today for a transaction that'll happen in the future. If you guess right about where the market's headed, you can make an absolute fortune.
And the cool thing is, you can bet in either direction. If you think prices are going up, you go long. But if you had some kind of inside track that prices were about to tank, say from an upcoming social media post about peace talks, you would go short. You'd place a huge bet that oil prices were about to fall off a cliff.
Now this is the real power-up. It's called leverage. With futures, you only have to put down a small deposit. They call it a margin to control a much, much bigger financial position. So, for example, $5,000 might let you control $50,000 worth of oil. This is how you can take a relatively small amount of cash and make an absolutely enormous bet, potentially multiplying your profits like crazy.
Okay, so let's shift gears a little. The analysis from our source, Lockstock Finance, alleges that this story gets even bigger than just one market event. It pulls us into the world of cryptocurrency, claiming a direct feedback loop was set up between political power and personal wealth, a way to maybe move and grow these kinds of profits with a lot less scrutiny.
So at the heart of this claim is this decentralized finance platform, or DeFi platform, called World Liberty Financial. According to the source, it was co-founded by Donald Trump and his sons, and a Trump family business owns a majority stake, something like 60%. It runs on big-name blockchains like Ethereum and Solana, and it has its own cryptocurrency token, WLFI.
The source alleges a pretty simple but incredibly powerful feedback loop. It goes like this. Step 1, the president signals that he's friendly to crypto. Step 2, that drives up investor demand for crypto in general, but especially for tokens that are directly tied to him. Step 3, the value of that WLFI token goes up. And step 4, his family's personal wealth goes up right along with it.
And the scale here, I mean, the numbers the source claims are just staggering. It alleges that in just the first half of 2025, over $800 million were made from this crypto venture. And the total estimated wealth from it, potentially over $11 billion.
But the claims don't stop there. The investigation laid out by Lockstock Finance goes even broader, pulling in a whole web of international connections and raising questions about foreign influence.
So the source lays out this timeline. Well, it definitely raises some eyebrows. Apparently, just before the election, an investor with links to the UAE bought a huge stake in World Liberty Financial, almost 49%. In that deal, the Trump family supposedly got an upfront payment of $187 million.
And then the source starts connecting the dots between some key players. It links Steve Witkoff, who is the U.S. Special Envoy to the Middle East, directly to this crypto platform because his sons were co-founders. And as you can see, the table lays out the alleged flow of hundreds of millions of dollars to all the main figures involved.
So, where does all of this leave us? Well, it kind of brings us full circle, doesn't it? The source material is basically arguing that while mixing power and profit is a tale as old as time, the tools being used today are dangerously new and efficient.
The bottom line of the argument being presented is this idea of a transactional approach to the presidency. It's a system where, allegedly, access and favorable policies can essentially be bought through things like financial contributions, whether that's through crypto tokens or other kinds of investments.
And honestly, this quote from the source, Lockstock Finance, really just hits the nail on the head. They're making it clear that corruption isn't a one-sided issue, but what they're arguing is different here is the industrial scale of it all, and just how direct the alleged mechanisms are.
And that leaves us with one final big question to think about. The source material we've gone through presents this really complex